So I guess we'll just about start. As I always go, Steve, are you ready?
I'm ready. Are you ready?
I am ready, Steve.
All right.
Well, thank you for coming on to episode number 7 of Lessons from Leaders. Today, my guest is Steve, the financial engineer, and we're just going to have a nice casual conversation on things that have to do with finances in today's environment. Steve, welcome.
It's a pleasure to be here, Emo. I've been watching and following you. I think we are both talkers at Mo Mondays way back when, and it's an honor to be here. Just the amount that you help others. My hat's off to you.
Well, thank you very much. Now, you actually beat me to the question I normally ask, which is, how did we meet? So you probably could just elaborate on that. Was it more Mondays we met first?
Well, you were a speaker before me, and I did check out your talk before I gave my talk, and then I think we just we crossed paths on LinkedIn, and met in person a couple of times, and then you introduced me to other people like Anne Marie or Anne Flynn there, and it seems like we have a lot of things in this same alliance. We're walking the same path a lot of the times.
Yes, indeed, we are. Actually, that's true because I mean, we talk about finance and efficiency and, well, engineering, and which is your background, which you could probably talk about in a few minutes. But for now, anyway, we are in an environment that I don't know if you say this is different from what we've had in the past, but these are strange times. And in strange times, I believe the right information is what guides people to make the right decisions and the right choices when it comes to their finances. Now, Steve, can you talk a little bit about the environment we're in now? This is post pandemic. And then we'll just kind of go through some questions that people might have about how to react to the situations we are facing now financially.
Yeah, I'll be happy to. And you mentioned I'm an engineer. I am a recovering engineer. So when I first made the transition from engineering into the financial world, I treated everything as numbers and charts and what made sense mathematically. But I soon realized money is not just math and charts. It's very, very emotional. And we continue to be in very emotional times. It was the pandemic. That was the main that got our attention now. Now there's wars going on overseas. There's a crazy election coming up this year in the States, possibly in Canada very soon.
Yes.
So our minds, we're going every direction. And a lot of times, because there's so much going on, we have no idea what we should be doing. I'll take that back. We actually know what we should be doing. We just have a hard time doing it.
Right. So I guess that probably leads to my first question, which would kind of expand on what you just talked about. What will you say are the greatest financial challenges people face today based on your practice and experience?
Well, if you asked me that question 20 to 30 years ago, I would have said it's education. But education is no longer the challenge anymore. If you don't know what to do, you can just Google it, or even now you can chat GPT it, right? AI is helping a lot. The big difference is it's no longer what you know, but it's what you do with your knowledge. It's never been so easy to be successful as it is today, but it's never been so easy to be distracted, always chasing squirrels, looking for different things, or fearing what's coming around. So, we had that freeze, flight, or fight,
Right.
the way we react to things, and that is going on. Look, that is happening with steroids, with social media, the news. It really is. You heard the phrase before, keeping up with the Joneses.
Right.
That is on steroids right now. I think that's our biggest, that is what is stopping the majority of Canadians actually doing what they know.
So now that would somehow how affect people's money psychology. Could you just touch on that a bit?
Yeah, so it's sometimes referred to as the vicious cycle of money. So I remember when I got my first job. Before that, I was a poor college student. We'd have enough money to go out on the weekends. Sometimes we were so poor we'd put all our food together there, and have
Right.
kind of a goulash. But I remember getting my first paycheck and thinking, man, I'm rich. And I started eating out at pubs, restaurants, went out to the bars a lot more, bought fancy camera equipment.
Right.
And what that is, that's kind of known as the vicious cycle of money. So the more money you make, a lot of times the more you spend, and then because you spend more, you end up having to work more or harder, you become stressed out, and that cycle just continues.
And I guess somewhere in that cycle equals more debt, probably could potentially be.
For a lot of people, they start living beyond their means. And I know when I did return to Nova Scotia after used to a lifestyle, and who's kidding who, the cost of living here in Nova Scotia can be quite high with the amount of taxes we pay. Um, I noticed that instead of making or saving, my net worth start going down.
Right. Now, I guess that probably would lead to what are the statistics we have today on Canadians and savings and money? Like what kind of statistics or science can we bring out there to?
The stats aren't good. So I'm not going to bore you with a bunch of numbers, but generally, what the herd mentality, what the majority of Canadians are doing is not working. There's something not quite right in the financial industry. So by following the herd, one of the scariest stats I came across was from Benefits Canada saying that 90% of Canadians will not reach or maintain financial independence. Now, what does financial independence mean? That's different to everyone. They had it at for the average Canadian to have financial independence, they needed 756,000 worth of assets, liquid assets, not including your house,
Okay.
and they came up with 90% of Canadians are falling short of that.
Wow. Wow. Now, what will you attribute that to? Is it just bad decisions or late planning, or what will you attribute that to?
I would say it is a mixture of a lot of different things. It's one of the things I've realized it's a lot to do with psychology, right? There's really the three parts of the brain that we talked about. I like to call the big part the elephant brain. That is the fight, flight, and freeze. Its main job is to make you survive.
Right.
So it fears things that it doesn't really understand, or it fears changes. It fears going across the leaving the tribe, I guess, or doing something different that not everybody else is doing. And then there's the monkey part of the brain that's always looking for emotional stuff, love, shiny objects, keeping up with the Joneses. And then there's the human part of the brain. I like to call it the Yoda. A lot of times the monkey brain is fighting against the Yoda and the elephant brain. And unfortunately, a lot of times that human part of the brain seems to be losing a lot of the battles, and we fall victim to marketing, again, the social media, and then the fear factor that's brought on in today's news and society.
Wow. So what can people do? What should people do?
Yeah, I think, there's a lot of people in my industry that say you need to invest in this or you need to invest in that, getting high rate of returns. They talk about that. But it really comes down to habits. Habits will become your philosophy of your success or the philosophy of your failures. It's like if you had two twins and one twin ate a chocolate bar every day and the other twin ate an apple every day, you wouldn't see much difference until, 30 or 40 years down the road. And the same thing, it really does come down to your habits. So making things, the habits that serve you easier to do while the habits that aren't serving you a little more difficult.
Right. Is this something which you teach your clients in your practice?
100%. One of the things we try to do is follow the philosophy of the wealthy. So the philosophy of the middle class is generally to spend first and invest what you got left over, which is generally zero for most. And
Right.
then the philosophy of the wealthy is really to invest first, to pay yourself first, and then spend what is left over.
Right. Now, since a lot of my viewers are, well, I guess the whole gamut of age range, so we have people in their 30s, 40s, 50s, and whatever. What kind of advice if you were to try to segment to say like the 30-year-olds and the 50-year-olds and those who are pretty close to retirement? What kind of advice? Now, I know again we don't have enough time to dive in deep, but this would just be kind of like a high level um, thing you would want to leave them with about what they should do at those different stages.
Well, everyone is different, but one thing you can do across the gamut is get crystal clear on what you actually want. Know
Yes.
thyself. Get crystal clear on who you are and who you want to become. And that's just going to separate so much of the noise and distractions out there. It's going to help you actually go for what you want, getting better results that eventually lead to peace of mind and confidence, knowing that you're on the right path. So that's my number one thing is get crystal clear on your want because you see it all the time. We're so busy being busy that we don't actually know what we want. There's people walking down the street on their phone, missing out on life.
Right.
But if you can just that simple thing, getting crystal clear on what you want, then you can have a plan and a path on how to achieve that. If we were talking about age, and listen, financial advice is always based on a one-on-one conversation. There's no blanket that covers and solves all issues.
True.
But generally, when you're younger, you kind of want to go for it. You want the investments that can provide a little more returns, but offer also a little more risk. Where when you're getting older, you want to make sure you preserve your capital. You want to make sure you keep your hard-earned money instead of losing it away to taxes, losses in the market, fees, or like I said, our psyche, consumer spending.
Right. I think our psyche actually, I almost think is the biggest thing there because all our decisions come from there. So that's a biggie. Now, talking about that, I know that there are quite a number of myths and misconceptions to do with money management. Could you shed some light on some of that and help clarify some of that also?
Some of the myths is if you just put your money into the stock market, you're going to make money and go rich. Um, and that is not necessarily the truth. One of the biggest reasons is because money is emotional. I'll keep on going back to that, but it's so powerful. Most people, including the Canadian biased financial advisor, tends to buy high and sell low, the exact opposite of what you're supposed to do.
Right.
Um, the stock market does show a trend over the long haul of going up, but during that, it's not just a smooth trail up. There's a lot of ups and downs along the way. And that can be an emotional roller coaster for a lot of people. And that's another reason why a lot of people don't invest. They just, it's too, the ups are never high enough and the downs hurt so much.
True. And it's funny how it takes a whole lot more to come back from a big loss if you're not managing risk.
That's
Um,
all right. Once bitten, twice shy.
yeah.
Another myth is you can get wealthy from one source of income.
Right.
It's generally we talked about the vicious cycle of money. The healthy, wealthy cycle of money that I talk about is, you find you first got to find income. It's not you can't get rich without making money in the first place unless you win the lottery or inheritance, but very few will do that. So it all starts with your career or your business. And then when you make the lump from good to great or the jump from good to great, hopefully you can start forming the philosophy of the wealthy where you invest in other wealth creations forms. When you go from good to great, what's nice is your income is going to increase pretty much automatically. New opportunities are going to come your way. You're a living testament to this. And you just continue that cycle.
Right. It's almost like what do you call it? A snowball coming down the hill and just keep.
100%. That's right.
True. I know I always tell people that you have to be patient because sometimes when it starts, or many times when it starts, it's a small ball. And for a while, it might still look like a small ball. But then when it starts picking up speed, it gets bigger and bigger and you can't stop it anymore. Right. So I guess patience is a big thing.
Patience is a huge virtue. And going back, the stock market's not going to make you rich. Your financial advisor, as much as it pains me to say this, is not going to make you rich or wealthy. It's you. Every time you look at yourself in the mirror, realize that you are your number one asset.
Right.
You are your major key to success. Everything else just complements you and the ability to grow that wealth that you've created.
Right. And I think also maybe the big thing there is again taking responsibility for our finances. It's very easy to, put it on somebody else and say, well, they have to take care of that. But the truth is, we are, I guess, our best cheerleaders when it comes to that. And we are the ones who are doing things in our own best interest. So it makes sense that we take all the time to, you know,
I couldn't say it better myself.
good stuff. Now, I know because a lot of people get financial advice from, well, all kinds of places. They go on the web, listen to social media, they're talking to friends and all that stuff. There's good advice and bad advice out there. Can you give examples of bad advice that you've heard people in your practice that people should be aware of so they don't go down the same path and make those same kind of mistakes?
Yeah, pray you just mentioned it, the patience that you need. Any get rich quick scheme seems to be bad advice. And I think we've all made stupid decisions with your money, myself included. And any of those get rich quick schemes never seem to work out. The advice going back to it is get really true on yourself, know yourself well, and work with professionals that have your best interest in mind, not someone that's serving an institution or or a firm, but someone that's representing and working with you, trying to achieve your goals, not their goals or the institution goals.
So working in your best interest first,
That's right.
right? Because yes, I believe people who give advice have to be compensated. However, it should be that they're putting you first in whatever decisions they're making. So the decisions they're making should be in your best interest first.
That is correct, and that's not always the case, which is sad to hear.
Right. So, what options do people have out there when they're looking for who to help them manage their money, and what kind of flags or good points should they consider when trying to figure out or pick out an advisor?
The options out there there's so many of them. Um, the majority will go to banks. And I know a lot of great people that work at banks, but unfortunately, they have to serve the institution that they work for. Imagine if Susan worked at the bank and continuously did what was best for her clients, but not what was best for the institution. How much longer would she last at the bank? Not very long, right? So my guidance is usually to find someone that's independent, that doesn't wear a certain kind of jacket or represent a company or firm, but represents you. So generally independent, that has a long and proven record that can give you references and referrals easily and happily.
Okay, that's great. Now, you hear about diversified portfolios. What is, I guess, again, a high level um, definition of a well diversified portfolio?
So, you're talking to a lot of people in my industry, and they'll talk about diversified portfolios owning a bunch of stocks or mutual funds. That is not being diversified. That is only being invested in the stock market. A truly diversified portfolio has several ways of creating wealth. Number one and foremost is your business or your career. Number two, a lot of people will look at investing or saving in the stock market. That's what gets all the news in the media because it's so exciting. You can do the 30-second glimpse on the news. Number three, especially for business owners, I look at disability and critical illness or health and dental benefits, just in case if anything happens to you along the way, you can have income coming in. I also am a huge fan of a properly designed whole life policy. And of course, there's the alternatives out there, such as cryptocurrency, precious metals, other currencies, private equities, angel investments. The list goes on.
Right.
Right. That is a truly diversified portfolio. And I forgot to mention real estate. I know you're a big fan of real estate.
Yes,
Real estate's another.
that's good. So now with the rise of technology and apps and all of that, are there any trends that are worth mentioning that people should know about when it comes to finances and financial planning?
I think we're seeing the end of the I always mispronounce this word, but the Keynesian economic cycle.
Right.
So this worked great at the end of the Depression. We've been putting a lot of Band-Aid fixes on uh, some of these collapses that we had in different markets. These Band-Aids are starting to show signs of stretching. So I think more important now than ever is look at ways to protect your wealth from loss in the markets and from taxes.
Right.
You know, we just came through the pandemic. There was a lot of government spending. My question to those watching, do you think taxes are going to increase or decrease? My belief is they're coming after us,
Yeah.
and wealth tax and investment taxes are just around the corner.
Wow. Well, they have to get the money back somehow, right?
You
So,
have to get the money back somehow.
yeah. Now, with all the information out there, I know people seem to be getting overwhelmed, or well, some people anyway. What kind of advice can you give them? And then after that, it would be great, Steve, if you could talk a little bit about what you do. And you wrote a book.
You know, with all the information out there right now and everything coming at, I'm sure there's lots of people feeling overwhelmed and unsure what to do. It's really not that complicated. Again, I feel like I'm a broken record here, but getting crystal clear on yourself and what you actually want is just going to make it so much easier. You're going to follow the philosophy of the wealthy, where you pay yourself first. And I generally set up 3 accounts for this. I set up a future self account, a main account, and a spending account for your emotional spends. And that emotional spending account is just going to find so much money that's fallen through the cracks and make you think twice about some of the stuff. Do I actually want this, or do I need it? The
Right.
future self account, I really break down into 3 categories where you're looking at retirement or old age. And I usually recommend something that's very tax efficient and boring that never goes down. And is generally a properly designed whole life policy. It's awesome. I also look at, how can you better yourself? And that's usually courses or going on, just becoming better at what you do. So I usually recommend low fee investments. Maybe it's ETFs inside your tax-free savings account. And then, for clients, I really say the other 10%, do what you want to do. Maybe that's real estate. Maybe that's wanting to hit some home runs into cryptocurrency, but just getting into that habit of investing first and then living off the rest is just going to serve you so much better than what 90% of the Canadians are doing. And that's the opposite. They're spending first and investing what's left over, which is usually zero.
Right. So, where can I get education, like some kind of tips? I know there are a whole lot of things out there, but then of course there's what is reputable or what is verified. But
Oh,
where should
I was
people go?
hoping you would ask that. You could go onto my website and you can get this almost Amazon bestseller, Grow, Control, and Keep Your Money.
I have my
Yes.
copy here. So let's
Uh,
talk about that. You tell us about the book, why you wrote it, and then you could either talk about that first and then talk about what you do, or what you have the floor, so
yeah.
you do whatever order you want.
Well, I've come a long way in my financial life. I started off like most financial advisors, where we're taught to sell mutual funds and lots of insurance. That's generally what you're taught to do when you enter the industry. You're getting to know me. That's not me. That's not the way I work. Even though I'm a recovering engineer, I still dive deep and try to do what is right all the time. And since then, I've worked with some great financial planners, and my business has evolved where now I align myself with only professionals. They have to be independent. They have to serve their clients first and foremost. And I felt that, I'm at a point where I can't help everyone. I can really only take on 2, maybe 4 clients max a month because my planning is pretty in depth. But I can write a book, and people can read the book and get all that information for less than $20 on Amazon. And I actually even put on an online course. If you do the online course, after that is completed, you have access to me for 90 minutes. I just felt this book is what I've learned as my 15 years as an engineer, and then my almost 8+ years in the financial industry,
Right.
just
So you're going to
focusing
send
on
me
what
the link.
works and what doesn't.
So you're going to send me the links to all of that.
Of course.
Excellent. That's good. So what is your company called?
Well, I market myself as the financial engineer. I'm Steve McClellan. My company is Design Your Future Financial Services, and really help Maritimers. And I have a couple of clients in Alberta, and I actually even have one in the Netherlands.
Wow.
So
Okay. That's good. Excellent. Well, as we get to the end of this to wrap things up, final words. Finance, Canadians, present economy, inflation, um, rising interest rates, all of that. Wrap all of that up and we'll end this.
final words. Look, again, there is so much noise going out there. There's so much distractions. Just focus on what your strengths are. Go from good to great. With AI coming up, focus on what makes you human and makes you more valuable, and you'll be fine.
Wise words. Well, thank you, Steve, for coming on. It's been great, and I know we're going to do more of this. And I actually do enjoy when we go for a walk and talks, and we get to talk about what we're into and what we're doing and what's coming up around the horizon and stuff. So
Yes, let's do that again. And you keep on doing what you're doing. I'm a big fan, and thanks for having me here.
thank you. You take care now.
You too. Bye-bye.
Goodbye.